You open your phone. It's late, the house is quiet, and you're checking your bank app before bed. The numbers on the screen are familiar. They look about the same as they did last week, maybe a few dollars less. Groceries, gas. But something feels off. Let's put some real-world numbers to this to understand the impact. Suppose you've diligently saved $1,000. You've worked extra shifts. You've cut back on expenses. You've managed to put that money aside in a standard savings account at one of the big national banks. You feel responsible. You feel secure. After a full year, with a typical interest rate of 0.01%, your account balance will have grown to $1,000.10. You have earned 10 cents. If the rate is 0.1%, a rate some big banks consider generous, you've earned $1. $1 for letting a multi-billion-dollar institution use your money for a year. Now, consider the other side of that equation. Groceries, likely up 2%. Gas, maybe up 3%. Rent, maybe even more. This is inflation. So, while your bank account shows a balance of $1,000.10, the actual purchasing power of that money has decreased. Your dollar buys you less than it did a year ago. In real terms, you haven't earned anything at all. You have actually lost ground. Your savings are being silently eroded, and the $1 interest payment is nothing more than an illusion of progress. Meanwhile, they took your $1,000 and lent it out on a credit card at 24.99%. If the person who borrowed that money carries that balance for the year, they could end up paying the bank nearly $250 in interest charges. The bank made $250 using your money. They gave you $1. They kept the other $249. Multiply that by millions of customers, and you begin to understand the scale of this operation. It is a wealth generation machine of staggering efficiency, and it is powered by the idle cash of ordinary people. This isn't an attack on the concept of banking. Banks provide essential services. They facilitate commerce and help people achieve major life goals. But the balance is off. The relationship has become predatory. The system is designed to reward the institution far more than the customer who provides the raw material, their own hard-earned cash. That feeling of running in place, of working hard but never getting ahead, is amplified by this financial reality. Your savings account, which should be a vehicle for growth, has become little more than a parking lot where your money slowly loses its value. Beyond the interest rate gap, there is a more direct and often more painful way that banks drain your resources: fees. These aren't hidden in the same way, but their cumulative effect can be devastating. Monthly maintenance fees, charged simply for the privilege of having an account, often waived only if you maintain a high minimum balance. Out-of-network ATM fees, they force you to pay for access to your money. Overdraft fees, a charge that can feel like a punch to the gut when you're already down. Let's move away from the abstract and look at what this really means for people. Imagine a single mother working 2 jobs. Her budget is calculated down to the dollar. One week, her child gets sick, and she has to buy medicine. That unexpected expense causes her account to go negative when her automated car payment goes through. The bank charges her a $35 overdraft fee. Now she's $35 deeper in the hole. The stress is immense. She has to decide what to cut. Groceries, the electric bill. This isn't a hypothetical. This happens every day across the country. The fee system disproportionately harms the very people who need every penny they earn. Consider a college student with a part-time job. They might get hit with a monthly service fee because their account balance is too low. It's only $12 a month. That's $144 a year. For them, that could be the cost of 2 expensive textbooks or a month's worth of groceries. It's a constant, slow drain that prevents them from getting ahead, from building that first small cushion of savings. The poverty tax creates a 2-tiered system. If you have enough money, banking is often free. You maintain a high balance, so you pay no monthly fees. You have access to premium accounts with perks. You can easily find an in-network ATM. But if you don't have that cushion, banking comes with a cost. You are penalized for your financial situation. The system that is supposed to help you manage your money instead becomes another source of financial pressure, another bill to be paid. It makes a tough month worse and a small financial mistake into a big one. This is the human side of those fee reports and bank earnings statements. It's the quiet anxiety of checking your balance, hoping a pending charge hasn't triggered a fee. It's the feeling of shame and frustration when you see that penalty. These fees are more than just numbers on a ledger. They are obstacles placed in the path of people trying to build a better life. They take from people who can least afford to lose, making the climb toward financial security steeper and more treacherous for those who are already struggling. There is another hidden force working against you, one that your bank does very little to protect you from: inflation. It's a word we hear on the news, but its effect is felt most concretely in the aisles of the grocery store. Picture a shopping cart. 5 years ago, the cart would be full. Today, the same cart looks noticeably emptier. Side by side, 5 years ago, full cart. Today, emptier, both labeled 100. The price of milk has gone up. Eggs have gone up. Bread has gone up. Meat has gone up. The dollar bill in your wallet looks the same, but it simply doesn't buy as much as it used to. This is the essence of inflation, the steady decline in purchasing power over time. And this is where your low-yield savings account fails you completely. $10,000 earning 0.01% interest. After a year, you have $10,001. But if inflation that year was 3%, the same goods cost $10,300. In terms of what you can actually buy, your savings are now worth about $299 less than when you started. You are losing buying power. Your bank is not going to make up for this loss. While inflation erodes the value of your savings, the bank continues to use your deposited money to issue loans at high interest rates. Those loan rates are usually well above the rate of inflation. They are protecting their own assets and profits, but they are leaving you exposed. By keeping your money in an account that pays next to nothing, you are essentially allowing inflation to eat away at your future, one shopping trip at a time. Your nest egg is shrinking, even as the number on your statement stays the same. This is why financial experts call cash held in low-yield accounts a melting ice cube. The bank benefits from this inertia. They count on you to leave your money sitting there. The safety of a traditional bank account is, in this sense, an illusion. It protects you from theft, but it does not protect you from the slow, certain erosion of inflation. The combined effect of the interest gap, punitive fees, inflation is more than just financial. It carries a heavy human cost. It's the constant, low-grade stress of living on the edge, the worry that a single unexpected car repair or medical bill could send you into a financial tailspin. It's the feeling of helplessness when you look at your bank statement and see your hard work being siphoned away by charges you can't control. This financial pressure can strain relationships, affect your health, and steal your peace of mind. It makes it harder to be present with your family and to plan for the future with any sense of optimism. We see this stress etched on the faces of people commuting to work, tired before their day has even begun. We see it in the tense posture of someone standing in the checkout line, carefully watching the total climb. But then, we see something else. We see the moment of realization, the spark of understanding that the system can be challenged. This is often followed by a sense of relief, a deep breath that comes with taking back control. It's the look on someone's face when they discover there are better options, that they don't have to accept the status quo. This relief comes from knowledge and action. It comes from learning that not all banks are the same. It comes from discovering that you can move your money to a place where it will be treated with more respect, where it will work for you instead of just for the bank. The moment a person opens a new account that pays a meaningful interest rate, or when they successfully dispute an unfair fee, a shift happens. The feeling of being a victim of the system is replaced by a sense of agency. The frustration turns into empowerment. The transformation is the heart of the matter. The goal is not to live in a state of perpetual anger at the banks, but to move from a position of weakness to one of strength. It's about understanding the rules of the game so you can start playing it to your own advantage. The solutions are not complex or reserved for the wealthy. They are accessible, practical, and available to everyone. The journey from financial stress to financial relief begins with the simple decision to stop accepting a system that is designed to take from you. All of this can feel overwhelming. It can feel like the system is too big to fight. But there is hope, and it comes in the form of clear, simple actions you can take today. You do not need a degree in finance. You do not need a lot of money to start. You just need a plan. Here is a simple 3-step escape plan to help you break free from the daily drain and start keeping more of your money. These are practical steps that anyone can implement to fight back. First, move your savings to a high-yield savings account. This is the single most important step you can take. Unlike the big brick-and-mortar banks that pay almost nothing, many online banks and financial technology companies offer savings accounts with interest rates that are dramatically higher, often 400 or 500 times higher. Moving your money is usually as simple as filling out an online application and linking your old account. This one action immediately turns your stagnant savings into an active tool that earns you real money and helps fight back against inflation. Second, look into joining a credit union. Credit unions are fundamentally different from banks. They are non-profit financial cooperatives owned by their members, the people who bank there. Because they are not focused on maximizing profit for outside shareholders, they often offer better deals to their members. This can mean lower fees or no fees at all. It can mean higher interest rates on savings and lower interest rates on car loans and mortgages. Check for local credit unions in your area. You may be surprised by how easy it is to join and the benefits they offer. Third, stop leaving lazy money in your checking account. Many people keep a large cash buffer in their checking account for convenience, but checking accounts typically pay zero interest. This is lazy money that is doing nothing for you. Take a look at your monthly expenses and determine the amount you actually need for bills and daily spending. Keep that amount in your checking account and move the rest, every extra dollar, into your new high-yield savings account where it can immediately start earning interest. Make this a regular habit at the end of each month. The story doesn't have to end with frustration in front of a banking app. It can end with a sense of control and hope. The quiet daily drain on your finances is real, but it is not unstoppable. The power to change your situation lies with you, and it begins with a few small, deliberate choices. This isn't about overthrowing the entire financial system overnight. It's about making smart, tactical moves that protect your money and your future from a system that too often prioritizes its profits over your prosperity. Remember the 3 steps. They are your immediate plan of action. First, move your savings to a high-yield savings account where your money can actually grow. Second, explore joining a credit union to escape the high-fee environment of for-profit banks. Third, stop leaving idle cash in a zero-interest checking account. Put that money to work. These are not complicated investment strategies. They are simple, powerful acts of financial self-defense anyone can perform. They are the first steps toward building a wall against the hidden drain. Your money is more than just numbers on a screen. It represents your time. It represents your labor. It represents your sacrifices. It is the raw material for your future. It pays for your home. It pays for your food. It pays for your children's education. It pays for your retirement. When small amounts are taken from you every day through low interest, through high fees, and through the silent theft of inflation, what is really being stolen is a piece of that future. Those small amounts add up to thousands of dollars over your lifetime. Years of your life that you work to earn. Start today. Don't wait until next month or next year. Take 10 minutes to research a high-yield savings account online. Find a local credit union and read about their membership requirements. Look at your checking account balance and decide how much lazy money you can move. These small actions will compound over time, leading to real savings and a brighter financial outlook. This is how you reclaim your future. This is how you ensure that your money works for you and not for someone else.